So let's go to the next issue. So initial audit engagements or opening balances. So when we say opening balances, so these are account balances which exist at the beginning of the period based on the closing balances of the prior period and reflect the effects of transactions of prior period and accounting policies applied in those prior period. So that is why when you look at financial statements of some entities, so you will notice that for the current period, so the figures are presented here, and for the previous period, there will be something like this, no, as restated 20x1. So that is why when you compare this column with the previous financial statement, so let's say you pulled the 20x1 financial statements, so the information reflected there might not be exactly the same as the amounts mentioned here or stated here because of the restatements. So this restatement could be a result of the error discovered in the current period, okay, or changes in accounting policies. So that is why we have to audit or obtain sufficient and appropriate evidence about the appropriateness of the audit opening balances when we audit our client for the first time. So this is required by our PSA. So for us to look on the opening balances, even if we are only auditing the current period. So that is why here is the summary of the different situation regarding opening balances. If we are unable to audit opening balances, so meaning to say we are not able to obtain sufficient and appropriate evidence about the opening balances of our client, so then that is equivalent to scope limitation. So inability to obtain evidence. So we will issue qualified or disclaimer of opinion, so depending on the pervasiveness of the matter involved. So let's say the opening balances, we were able to obtain sufficient and appropriate evidence and we have found material misstatements and the client refused to correct them. So if the client refused to correct them, then that is equivalent to material misstatement. And we know if the reason is material misstatement, our opinion is either qualified or adverse, depending again on the pervasiveness. Now, if our client use inconsistent accounting policies, so we have to determine whether it is justified or not justified. So because in case it is justified, then we will issue unmodified opinion and will include an explanatory paragraph, no? Emphasis of matter paragraph, drawing the attention of the users to the note, explaining the reason for change in accounting policy. So this time, what you will use an emphasis matter paragraph because that information is something about the financial statements. So information contained in the financial statement. But if the inconsistent accounting policy is not justified, it's not properly accounted and disclosed for, then that will be equivalent to material misstatement. And therefore, we will issue what? Qualified or adverse opinion. Now, finally, if the prior period auditor report is modified and the reason for modification is still relevant, then we'll have to modify our current report appropriately. Okay, so it could be disclaimer, it could be qualified, it could be adverse, depending on the matter that gave rise to modification in the prior period. Next, another issue that we will look into would be the group audit. So group audit is the case wherein you are auditing group of companies that are related with each other. So like for example, a parent company with different subsidiaries or components. So like divisions, branches, associates, subsidiaries as mentioned. So in this case, you will be responsible for audit of not only an entity, but a number or group of entities. So in this case, our objective is to determine whether we have to act as the auditor of the group financial statements. So because end of day, what will happen is that the companies will need to prepare a group financial statements, often known as consolidated financial statements. So to present the financial information of the group as a whole based on substance, so rather than their legal form, because although they are operating as separate entities, so they have what we call this, they are linked, no, with for example common ownership, okay, or that they are owned, no, by the parent entity. So therefore, in substance, they are just really one entity. Okay, so divided into different companies. So that group financial statements will have to audit that. No? So together with the information of the different components. Now we also have to communicate clearly with the component auditors, if applicable, so about the scope and timing of their work on financial information, so related to the components and their findings. So in group audit, it's possible that we will not be auditing all the entities belonging to the group alone. So it's possible that some of the components may be audited by another auditor, and we call that component auditor. Okay? So as the group auditor or group engagement team, so you have to consider the coordination of the work, so between the group engagement team and the component auditors. And finally, to obtain sufficient and appropriate evidence. So this stands for sufficient and appropriate evidence. So about the financial information of the component and the consolidation process. In order for us, the group engagement team and the group engagement partner, to express an opinion whether the group financial statements are prepared in accordance with the applicable financial reporting framework in all material respects. So in group audit, it is the group engagement partner, so who is responsible for the direction, supervision, and performance of the group audit engagement in compliance with the professional standards like the PSA or the Philippine Standards on Auditing and other regulatory and legal requirements, and whether our audit report is appropriate under the circumstances. And because of this, the group engagement partner will not refer to the component auditor in issuing the group audit report. So in this case, the group engagement partner will assume responsibility, so with respect to audit of the group financial statements. So even if you use the work of component auditor in the course of coming to an opinion with respect to the group financial statement, you will not refer that to your audit report. Then finally, the group engagement team should communicate its requirement to the component auditor on a timely basis. So to set out the work to be performed and how we will use the work of the component auditor. So including the form and content of the component auditor's communication with the engagement team. So in practice, what normally happens is that the group engagement team will send the instructions including different templates, no? So that those templates will determine the form and the content of the communication to be included by the component auditor and to be sent to the group engagement team. So among others, in communicating our instruction, normally the items that we communicate to the component auditor include number one. So we request for the component auditor's commitment and cooperation, so in the conduct of the group audit. So we also communicate to the component auditor rather, the ethical requirements, particularly with respect to independence. So we'll also ask independence confirmation from the component auditor. So the same way that we ask independence confirmation from the members of our own audit team. So this one, another one, the third one that we communicate with the component auditor is the component materiality. So including the performance materiality. So that is different from the materiality that we use in the group financial statements. So normally we will also allocate specific materiality to the different components, so of the client's financial statements or group financial statements. So that assigned component materiality will also be communicated to the component auditor. So another, we will also communicate to the component auditor the identified significant risk of material misstatement related to the group financial statements. We will also ask the component auditor to communicate any identified significant risk of material misstatement of group financial statements in the component. So including how the component auditor was able to respond to those identified significant risks. Then finally, we also communicate to the component auditor the list of related parties prepared by the group management, and we also ask the component auditor to communicate to us any additional related parties that the component auditor has identified that is not yet included in the list provided by the group management. So that's what happened, no, during the risk assessment phase of the group audit. And then, after performing the procedures and during conclusion, so here are the matters that are relevant to the group engagement team's conclusion that we will ask from the component auditor after the conduct of the audit procedures. So especially if we decide to use the work of component auditor. So we'll ask the component auditor to communicate back to us their compliance with ethical requirements, particularly independence. So which we include in our communication in providing the group instruction. So related to the audit of the group financial statements. So we also ask the component auditor to communicate back to us their compliance with our requirement, with the group requirement. So usually through the templates and the documents that will be sent out when we initially send the group instruction. So we also need the communication about the financial information of the component. So if there are adjustments, if there are reclassifications made by the component auditor with respect to the component entity, then we will include that in evaluating our group conclusion or group team's conclusion. So we also ask for information on instances of non-compliance with laws and regulation. That's what we mean by NOCLAR. So non-compliance with laws and regulation that could give rise to material misstatement related to the group financial statements. So we also ask for a list of uncorrected misstatements of the financial information of the component being audited by the component auditor. So we ask communication about indicators of possible management bias. So any description of identified material weaknesses related to internal control related to financial reporting. So we also ask the component auditor for other significant matters relating to fraud that the component auditor has communicated with those charged with governance. Other information or matters that may be relevant to the group audit, and finally, the component auditor's overall findings, conclusion, and opinion. And then we will evaluate the sufficiency and the appropriateness of the evidence. So as the group engagement team, so you'll have to evaluate whether the component auditor's communication consists of sufficient and appropriate audit evidence. So you will discuss the significant matters arising from your evaluation with the component auditor, with the component management, and with the group management. And you will also determine whether there is a necessity, no, to review other relevant parts of the auditors or component auditors working papers, especially if you will rely on the work of the component auditor. So because the group auditor can also audit the component auditor after all, or perform additional procedures even if you are not originally the assigned auditor of that component, especially if you think that the work of the component auditor is not appropriate or not sufficient. Now, if the group engagement team concludes that the work of the component auditor is not sufficient, this is what I was saying about, then the group engagement team shall determine what additional procedures are to be performed, including whether they are to be performed by the group engagement team themselves or by the component auditor. Okay, so because, for example, if you are satisfied with the work of the component auditor, but you want the component auditor to review additional or to perform additional procedure, so you can cascade that information to the component auditor. or if the group engagement team want to do the procedures themselves, so then you have to coordinate with the management, no, with the management of the client. Okay, now for the summary part. So again, no, the group audit is premised where you are auditing a group of companies. So let's say in this case you are ABC CPAs and you are the group auditor. So the members of the audit team here are called group engagement team, and the partner responsible for the group audit is called the group engagement partner. As the group engagement partner, you will sign on the report of the group's consolidated financial statements. Okay? So these group financial statements, also known as the consolidated financial statements, so come from the information from the separate financial statement of the parent company and its components. So for example, this is the parent company. It will have different components like subsidiary, associates, divisions, branches, joint ventures. So for example, in this case, parent company has three components. So component A, component B, and component C. So each of them, including the parent, will have their own separate financial statements. So but because they are owned by the parent company, for example, okay, so their financial statements, their financial information will be incorporated in the financial statement of the parent company and will consolidate the financial information among the group to come up with the group financial statements or the consolidated financial statements. Okay? So your objective as group auditor is to obtain sufficient and appropriate evidence about the consolidation process. So because if there are errors or misstatement that arose during the consolidation process, so it could affect the group financial statements. And also as group auditor, you'll have to determine whether you can act as the auditor of the group financial statements, especially for example you are auditing the financial statement of the most members of the group. Like for example, ABC and company audits parent company, component A and component B. So but the problem is that, as mentioned earlier, so it's possible that one or some of the components in the group may be audited by another auditor. Like for example, in this case, so ABC and CPAs audit the FS of parent company, component A and component B, but not component C. So component C is being audited by another auditor. Like for example, in this case, XYZ CPAs. So this XYZ CPAs is what we call a component auditor. Okay? So with respect to FS of parent company, component A and component B, so no problem because you are the one auditing them. But with respect to component C, then you'll have also to ensure that there is an appropriate evidence, sufficient and appropriate evidence with respect to financial information of component C. So because after all, the information from component C will be included in the group here, no, in the group financial statements. So that is why, with respect to the group audit procedure, you have to communicate the scope, timing, and findings of the component auditor on their work, no, related to the component financial information. And you have also to obtain sufficient and appropriate audit evidence about the financial information of this component, even if you are not auditing them in the first place or originally. So therefore, with respect to the evidence related to component C, so you have a choice whether you perform procedures related to this component yourself as the group audit team or group engagement team, or you can rely on the work of the component auditor. So if you will rely on the work of the component auditor, then the component auditor will communicate to you their findings related to their audit of component C. So that's why I mentioned earlier, we have to consider the competence of the component auditor, including their compliance with ethical requirements and other different set of communication requirements that we have discussed in the previous slides. So in case you do not want to rely on the work of the component auditor, then you'll have to do the work yourself. Okay? So usually, if the component is significant, you'll have to perform additional audit procedures. But if the component is not significant, you can limit your work in performing analytical procedures on group level. But if it's significant, then you'll have to perform further audit procedure with respect to this component, so even if you are not in charge of auditing their financial statements. Now, finally, if you uh, intend to rely on the work of the component auditor, so you rely on their work, you inspect their working paper. So, even if that is the case, you are not to make a reference on the work of the component auditor when you issue your audit report. So, no reference will be made on the group audit report. So, in that case, that is what we call assumption of responsibility. So, you assume the responsibility in the group audit. So, without reference to the work of the component auditor, even if you use their work in the course of your audit. So next, another one, we have using the work of an expert. So this one, we also explain this in completing the audit, and even in a specific information, no, I think, no, auditing specific items in substantive audit procedures. So you refer to that with respect to the procedures relating to using the work of an expert. But what is the implication on audit report? So the implication on audit report is for us, auditor, not to refer on the work of an expert when we issue our audit report containing unmodified opinion. So unless it is required by law or regulation. So similar to the group audit, we assume responsibility whenever we use the work of an expert. So similarly, when we use the work of a component auditor, so the partner assumes responsibility. You do not refer to the work of an expert when you issue the audit report.